Welcome back to Market Moves, where we bring you all the day's moves in just a few minutes. I'm your host. Let's get started. If you like this video, hit the like button, subscribe, and turn on notifications so that you never miss an episode. Tesla stock is soaring today after the company's wild earnings report that blew past Wall Street estimates. The electric car maker said its adjusted earnings per share came in at 93 cents, significantly higher than the 54-cent estimate. And while revenue did fall short of expectations, it was still impressive considering the ongoing chip shortage. Shares are up about 7% today. Apple is also seeing some serious gains today after reporting better than expected quarterly earnings yesterday. Shares are currently up more than 5% on the news. Revenue was slightly below analyst expectations, but profit and earnings per share beat estimates. And our final big gainer today is Shopify. The e-commerce giant reported better than expected quarterly earnings and revenue late yesterday, and shares are up more than 7% in response. So those are the big movers today. Now let's check out the markets. The Dow Jones Industrial Average is down fractionally right now, hovering around the flat line. Now over the last 5 days, the market has moved pretty much sideways, basically consolidating the previous month's gains. As you can see from the chart, we're almost exactly at the same level that we were at on February. Now it's worth noting that this consolidation has been accompanied by relatively low trading volume, which suggests that many investors are sitting on the sidelines, waiting to see what happens next. In fact, trading volume has been declining in general since mid-February, which is a sign that the bulls may be losing interest. This could be a potential red flag. Of course, we'll have to wait and see how things play out. Today's economic calendar is relatively light. We got the following data releases scheduled today. We got the Job Openings and Labor Turnover Survey, or JOLTS for short, at 10 a.m. Eastern Time. At 1 p.m., we have the Federal Open Market Committee's statistical sheets. Then at 4 p.m., we have the weekly Mortgage Bankers Association Mortgage Purchase Index. And finally, we have the Treasury International Capital at 4:30 p.m. The biggest movers in the stock market today are, of course, Tesla, Apple, and Shopify, all reporting earnings today and seeing positive movement as a result. Coming in at number 2 on the list, we have Carnival Cruise Line. Shares are up 10% today after the cruise operator said that it expects to resume sailing this summer. This is good news not only for Carnival but for the entire cruise industry, which has been devastated by the pandemic. Royal Caribbean Cruises is also seeing some nice gains today on the news. Next up on the list, we have Dollar General. Shares are up 8% today after the discount retailer reported better than expected quarterly earnings and revenue. The company also raised its dividend by 10%, which is always good to see, and it announced a new share buyback program which should help boost the stock price. Next, we have United Airlines. Shares are up about 6% on no real news. The stock is probably benefiting from the overall strength in the market and from the reopening trade. Next up, we have Ford Motor Company. The automaker is set to spin off its electric vehicle business into a separate company called Ford Model E. Ford says that the move will allow it to focus on developing and manufacturing EVs without the distraction of its more traditional internal combustion engine business. This is interesting because it shows that Ford is really committed to EVs. Next up on the list, we have Biogen. Shares are up about 5% after the biotech company said that it would appeal a recent FDA decision to reject its Alzheimer's drug. This is obviously a risky move, but if Biogen is able to win the appeal, it could be a huge win for the company and for patients suffering from Alzheimer's. Next up, we have Booking Holdings. The online travel agency reported better than expected quarterly earnings and revenue, and it gave strong guidance for the rest of the year. This is good news not only for Booking Holdings, but for the entire travel industry, which is still struggling to recover from the pandemic. Expedia Group is another online travel agency that's seeing some nice gains today on similar news. Next up on the list, we have Eli Lilly and Company. The pharmaceutical giant reported better than expected quarterly earnings and revenue, and it raised its dividend by 8.75%. Dividend increases are always good to see, and they're especially welcome during these uncertain times. Next up, we have Walgreens Boots Alliance. The drugstore chain reported better than expected quarterly earnings and revenue, and it gave strong guidance for the rest of the year. This is good news for Walgreens, of course, but it's also good news for the retail sector as a whole. Next up on the list, we have Tyson Foods. The chicken and beef producer reported better than expected quarterly earnings and revenue, and it raised its dividend by 12%. That's another big dividend increase that should help support the stock price. And finally, we have Broadcom Inc. The software company reported better than expected quarterly earnings and revenue, and it gave strong guidance for the rest of the year. It also announced a new share buyback program. So good news all around. When we look at the biggest decliners of the day, we have two names that stand out to me. They are American Airlines and Southwest Airlines. Both are down about 4% on the day, likely reacting to a downgrade from Deutsche Bank. The bank downgraded both companies from hold to sell, citing concerns about rising fuel costs. This is obviously not good news, but it's worth keeping in mind that airlines are very sensitive to fuel prices, so it's not that surprising to see their shares fall on this news. Beyond the individual stocks moving today, there are two other notable trends that I want to highlight. First, the S&P 500 is now trading at a record high. Every time the index hits a new high, it gets a lot of media attention. But it's important to remember that this doesn't happen in a vacuum. When the S&P 500 hits a new high, it's usually because the economy is strong and corporate profits are booming. That's why it's so important to look beyond the headlines and to focus on the underlying fundamentals. Second, oil prices are nearing a 13-year high. This is due to a number of factors, including the ongoing conflict in Ukraine, the rise of China, and the reopening of the global economy. Oil prices are up more than 30% this year alone, and it's possible that they could go even higher. If that happens, it will obviously be positive for the energy sector, but it could also be a drag on the broader market. So that's what's happening in the markets today. The S&P 500 is hitting record highs, oil prices are nearing 13-year highs, and a number of stocks are moving on earnings. Be sure to stay tuned for more updates. This week we're going to discuss how to invest in real estate without buying property. There are a number of ways to do this, including REITs, mortgage investing, and real estate crowdfunding. We'll discuss the pros and cons of each approach and show you how to invest in each one. So whether you want to diversify your portfolio into alternative investments or you simply want to learn more about real estate investing, be sure to join us. On Tuesday, we're going to talk about one of my favorite topics, and that's how to find undervalued stocks. There are a number of different ways to value a company, but I think that one of the most effective is the discounted cash flow analysis. So we're going to walk through step by step how to analyze a company using this approach. We'll use a real company as an example, and we'll talk about what to look for when analyzing a company's financials. So whether you're an experienced investor or you're just getting started, this is a lesson that you won't want to miss. So don't forget to check back on Tuesday for that lesson. And until then, be sure to follow us on social media. We post daily market updates over there and a number of other great investment resources. Thanks for watching, and we'll see you next time.